How to turn $3,000 into $30,000. Hello and welcome to today's video. Today we're going to show you several ways to turn your hard-saved $3,000 into $30,000 over a short or longer period of time. 1. Stock investments, ETFs, or funds. The number one way is through traditional investing in stocks, funds, or ETFs. We assume an annual return of 7% and calculate profiting from the compound interest effect. Here is a calculation that shows how to go from $3,000 to $30,000 with a 7% annual return. In the first year, we calculate the $3,000 times 1.07. Since this is a 7% increase, it gives a total of $3,210 after the first year. In the fifth year, it's $4,207.66, and after 10 years, it's $5,901.45. So after about 34 years, an interest rate of 7% annually, you have turned your initial $3,000 into a fortune of $30,000. The higher the amount of money, the more you benefit from compound interest. For example, with a capital of $30,000, it will take you only about 5 years to reach $40,000 because your annual interest growth is over $2,500. By the time you reach $50,000, you will only need another 4 years in this scenario, and the annual interest growth has grown to over $3,000. For example, if you start with $10,000 instead of $3,000, it will only take you about 20 years to reach $30,000. Therefore, be sure to use the power of compound interest and invest a large amount as early as possible to make your money work for you. A conclusion to the classic way of investing in stocks. If you have a starting capital of $3,000 at an annual interest rate of 7%, it will take you around 34 years to reach the $30,000 final capital. 2. Real estate with fix and flip. Basically, it must be said that investing in real estate with $3,000 does not work alone. A well-known method to make money in real estate is fix and flip. Fix and flip is a method in real estate investing where an investor buys a property, renovates it, or improves it, and then sells it at a higher price. This method is designed to make a quick profit, and the investment should be realized in a short period of time. Here is an example. An investor buys an outdated property for $100,000, renovates it for $50,000 to increase its value, and then sells it for $250,000. In this scenario, the investor has realized a profit of $100,000. Fix and flip is especially attractive to experienced investors who have a deep understanding of the real estate market and renovation techniques. So, if you were to invest $3,000 with an experienced investor, the following conditions must apply for you to generate $30,000 in profit. The property has a purchase price of $100,000. You invest $3,000, and the other investor invests $97,000. The cost of repairs and improvements is $50,000, which the other investor pays. His capital investment is therefore $147,000. Yours is $3,000. The property is sold for $250,000, with a total cost of $150,000, resulting in a profit of $100,000. In percentage terms, you financed 2% of the property, while the other investor financed 98%. Therefore, from the profit of the property, you receive $2,000, while the other investor receives $98,000. you were able to increase your assets to $5,000. In the next investment, you already have a share of 3.33% and receive another $3,333. Your net worth increases to $8,333. To get to over $30,000 with these deals, you would have to do it 5 times to get a net worth of $38,578. The only major drawback to these deals is that you have to find another investor who will share and pay you fairly accordingly with this small amount in their real estate deals. Furthermore, you have to succeed in a grandiose deal with $100,000 profit 5 times in a row. As you can see, it's not impossible. Many real estate investors who run fix and flip do 2 to 5 deals per year with no problem. Accordingly, you could go from $3,000 to $30,000 in assets in less than 2 years. However, it also comes with a lot of risk. 3. Real estate for rent. We assume that you buy a property for $150,000 with equity of $3,000. The loan amount is therefore $147,000. With a long-term tenant, you are very lucky with a rental property, as she pays $1,000 per month for the small apartment due to its good location. The monthly costs amount to the mortgage payment with 3% interest monthly, $387.50, and 2% redemption monthly, $245 to $612.50. The insurance is estimated with $50. The taxes amount to, for example, 1.25%, around $12.50. Administration costs strike with $50. For the repair and maintenance costs, $100 result, and you build reasonably for unexpected expenditures, a reserve of $100 per month. In total, you incur a monthly cost of $925. The monthly cash flow of the rental income of $1,000 minus the $925 cost equals $75. When this is multiplied by 12, the result is an annual profit of $900. Initially, it certainly makes sense to add the profits as unscheduled repayments to pay off the loan, thus making annual unscheduled repayments of $900. Already in the first year, the loan is repaid by the $2,940 and the special repayment of $900, and thus amounts to $143,160. Thus, the amount of the interest sum reduces and repayment rate increases. The loan sum amounts to, after 5 years, thus approximately $127,000, and after 10 years, approximately $103,075.94. After 20 years, a remaining debt of $37,016.94 remains. However, the annual repayment of the loan is now over $7,000, which is why the repayment is faster and faster as the interest burden becomes lower and lower. This also makes additional unscheduled repayments on a real estate loan very worthwhile. After less than 25 years, the real estate is thus paid off, and you generate from then on an annual cash flow of $1,000 minus the fixed costs of $312.50, $687.50 monthly, and thus annually $8,250. Paying off the property, you therefore need another 3.6 years to reach the $30,000 wealth in additional cash to the property. If the value of the property remains stable, After the 25 years, you will not only have a cash asset of $30,000, but also a property worth $150,000. It should also be emphasized that the annual cash flow is very high from the time the property is paid off. After 10 years, you've already generated an additional $82,500 in cash assets. Rent losses and rent increases have not been calculated here. Thus, the later potentials are clearly higher with the possession of a real estate than with shares, for example. Of course, in both cases, the risks, opportunities, and current circumstances have not been calculated. However, since an increase in population is also to be expected in the coming years, a significant increase in rents in good locations is more likely than a reduction in rents, especially since inflation generally generates higher prices. Of course, then your standard of living and your money is also affected by inflation and can therefore be neglected. 4. Risky trading. If you start with a starting capital of $3,000 and achieve a profit of $30,000 per year by risky trading, you will have a profit of $900 after the first year, and thus a new capital of $3,900. If you succeed in doing this for 9 consecutive years, earning an annual profit of 30%, you will have a final capital of $31,813.50. This means that you will have to increase your capital just under 9 times to reach $30,000. Please note, however, that high-risk trading is not for everyone and can involve high losses. To make such a high profit so many times in a row is therefore almost, if not quite, impossible. 5. Company formation. Lastly, we would like to mention business creation as a way to convert your startup capital of $3,000 into $30,000 in final capital. To do this, start your own business and use your startup capital to both start and build it up. Invest a lot of time and manpower in building your business. Of course, you are contributing a lot of capital here, even if it is your time and human capital. Work hard to attract, retain, and satisfy customers, and scale your business for the long term. Once your business is profitable, you can reinvest your profits, but also take a portion as a salary for yourself personally. Reinvest in innovation and developing your business, as well as reinvesting your personal capital and generating other income streams, such as dividends, rents, and interest accordingly. Ideally, these income streams are passive. You may also be able to sell your business after a few years if you want to, and you find a suitable buyer according to your financial expectations. When exactly will you be able to generate the $30,000 from your initial capital of $3,000 here is impossible to predict with the last proposal of starting a business, because too many variations and options are possible. This can sometimes succeed in the first month and take several years for other niches and projects. It is important to research thoroughly and develop a well-thought-out strategy before investing in entrepreneurship. Pursue your vision and focus 100% on your goal. Good luck with that. That was today's video about different calculated ways to grow your net worth from $3,000 to a full $30,000. Do you dare to carry out any of the possibilities? Please note the risks that each of these possibilities has. Thanks for watching.